Hi, my name is Alex, and today I will be discussing the Commonwealth Bank of Australia and will be making the recommendation to hold the stock. CBA is Australia's largest bank. They serve 17 million customers across 13 countries and have assets of $1,092 billion. As of the 24th of March, their share price is $107.35 and their market cap is $181 billion. CBA's share price has been quite volatile over the last 3 months, but has been trending upwards since the beginning of March. Investors should hold stock and wait to see if the price continues upwards. Now onto the SWOT analysis. Strengths. One of CBA's strengths is that they have a strong marketing strategy. For example, they push their CAN campaign, a positive and accessible message which differentiates them from the rest of the market. From a human resources perspective, CBA focuses on creating an inclusive workplace. CBA's goal is to culturally and gender diversify their leadership and board. Weaknesses. One of CBA's biggest weaknesses is that they have loaned $14.2 billion to the fossil fuel industry globally since 2016, including $2.8 billion for projects that expand the fossil fuel industry. Next, CBA's net interest margin declined to 2.03% last financial year, which restricted its net interest income. As you can see on the chart, CBA has been experiencing an increasing decline in sales growth over the past 5 years. As of last financial year, CBA's sales growth stands at almost negative 15%. The decline in CBA's financials is partly because of COVID-19. It would be beneficial to hold the stock and monitor if CBA can recover to their pre-COVID figures. Their fossil fuel policy should also be monitored, as at the moment this is an unethical stock. Opportunities. The emergence of fintech is changing the way banking is carried out. Banks have been experiencing tough competition from cost-effective fintech innovations. CBA could stay competitive by investing into fintech capabilities. Furthermore, expansion of activities further into Asia and other emerging markets can help CBA to have long-term growth. Finally, threats. Neobanks are a threat to all conventional banks. They have the potential to attract customers away from CBA due to their competitive rates, low fees, and more personalised solutions. CBA needs to create a strategy to stay competitive amongst the rise of the neobanks. And finally, the current RBA cash rate is at a historic low of 0.1%. A prolonged period of such low interest rates will have a larger negative effect on bank profits. In conclusion, based on CBA's share price history and SWOT analysis, my recommendation is to hold CBA stock. Their market position shows that they have a lot of potential, but also a few weak spots to rectify. The best course of action is to monitor their position. Here are my references. Thanks for listening to my presentation.